Stock of the day, I thought we'd take a look at the ASX only because this morning at Toggle Market there is a strong likelihood of delay to the go live date of its chess replacement project. This is this blockchain project. The exchange now has its sights set on July for the software update rather than the end of April. It's still saying this year. Seems to have been going on for a lot of years. Investors may recall the ASX was scrutinised after a software bug caused a trading outage in November last year, so the pressure is on to avoid problems in around this time. Now, the stock dipped. I'm not sure it's on the back of this announcement, but I thought it's worth looking at the ASX as an investment at the moment, and this continual delay of the new technology. Mathan, does it play into your sort of view of ASX at all?
Yeah, look, I think ASX. Look, I don't think the market would be surprised by the delay. It's almost it's like when stocks do one-off issues, but it happens every year.
Yeah.
it's not a one-off.
Yeah.
It's a regular one-off. And ASX delaying in technology is not really a one-off. It's a regular one-off.
Yeah.
So I think the market already knew that was always going to play out. I have to give them credit. They are going through a fair amount of rebuilding internally. They've got a lot of new, I suppose, restructure going through, and that's about the technology change. So I think it's getting better and better, but the track record of technology is weak to very weak.
Right.
But it's a good quality defensive play. It's a utility. It's a dependable monopoly dominant player. It's a we actually, this is probably one of the, we traded it really well. We got it sub 70, we got out at 90, and it's come back. It's actually fairly priced. I don't think you're getting the discount. I don't think it's expensive. The cycle is probably going to get a bit weaker. You've had cap raising left, right, and centre. All of these have played out quite well in the last year or so.
Yep.
If you're a broker and you didn't do well last year, good luck next year. So in that scenario, I think ASX is a good stock, but it's a bit like buying a house. If you buy it at the right time with ASX, you love the stock.
Yep.
If you buy it at the wrong time, you sit there and look at it.
Is now the right time to buy it?
Yeah, I think you'll get a discount. I think you'll get lower. So I'll be waiting to see it. I'll be looking at low 70s, and when things start to, when it gets to 70s, people are not looking at this, and that's the time to buy it. And I think there's a real chance that this could be a potential takeover target again. That's just a free kick. It pays about a 3% yield. So in a current environment, that's solid. It's a dominant player. It's non-correlated to the economy. Actually, it actually is good in a market that might get hit because more selling, that they do more. Right. So they actually do well in a bad market. Exactly. So it's one of those non-correlated stocks that you can look at, and it's a large cap, dependable. So yeah, it's a bit like Woolies to me. Right. You buy these things for non-correlated upside.
Right. So not now.
Not now.
You'd hold it if you're.
Yeah, I'll be holding it, and if it gets to low 70s, I'm a buy.
Okay.
There's still a bit of cyclicality here, though, Math. Every time there's a big bull market, you get a lot more IPOs coming aboard.
Yep.
Listing numbers rise, and you get those one-off listing fees, as well as more stocks paying you annuity fees. No one should argue about the quality of ASX. This is a superb business, and it's obvious why. It's a classic network effects business, and that's obvious. I don't think there's no great insight there. But it's a slow-growing business, and that means that despite its quality, the price you pay matters with ASX, and we have to think about that pretty carefully. So, this is, Mathan mentioned, a 3% yield, that looks quite sustainable. I know it looks very high on a PE basis, but that's because a lot of the earnings come through as cash. And I think on a free cash flow basis is a more reasonable way of looking at this business rather than a PE basis. So you get 3% yield. I think earnings can probably grow 4% or so.
You don't think of this as a utility without the debt?
That's interesting. Yeah, you could do that. Yeah,
that's what you pay the multiple for, because it's a utility without the debt. So
and with franking credits.
Exactly. And a free kick, if somebody bids on it, you get the free kick.
Well, I think the total return you're looking at here is somewhere between sort of 6-7%. And if that's you, if you're happy with a very good quality business giving you 6 or 7% in a lowish risk environment, I think you can buy it. But for me, I think this is a solid hold.
Yeah.
You can do a lot better than this, I think, but it is a high quality business. And Math, we've spoken about the potential for a takeover or an acquisition in this area. I think it makes a lot of sense for ASX to link up with international exchanges, and it must be a target on weakness for some of the bigger exchanges, I think.
Yeah. Well, it's been tried before. It wasn't seen for, and then got knocked back. But
Yeah,
now,
I think
Chi-X is
I
a
think
bit
the
stronger, I suppose.
Yeah, that's right.
I think the
That's
bigger,
right. I don't think that would happen now.
likely
dancing partner is London Stock Exchange,
Right.
because they got the technology, they got the platforms, and a lot of Europeans want to have Chinese exposure, but they don't
Right.
want to go to China.
Right.
They want to play through Australia. So that makes a good link, and the technology with London Stock Exchange is a hell of a lot.
And
So-
Chi-X is owned by a Chicago board of CBOW, so
CBOW, yeah.
at least there's some
Yeah.
competition there.
Well, that's the thing, and for me, it was always about that. They needed the competitors to be able to be
Right.
sold.
Yeah.
Now they can be.
Yep. Okay.